And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. Sorry for the little mishap there. Welcome to the Market Prep. Happy Friday. Happy St. Patrick's Day. Happy Quad Witching Day for those who celebrate. Welcome to the Market Prep for March 17th, 2023. I am JD filling in for our good friend Mr. Hoagland, who is taking a little time off to celebrate his wedding anniversary today. Hoag, if you and Donna are listening, happy anniversary from all of us here in the Market Prep. You know, it's kind of funny how you don't use a piece of software for 4 or 5 months and then just expect it to work as soon as you fire it up, right? Minor hiccup, tech issue getting started this morning, but here we are. We made it, 8 o'clock. We might cut this a little short just so we can all get ready for the equities open. I'll get into that in just a second. As always, thank you for choosing to spend your time with us. Our goal here, as Hoag says, is to apply accurate context, sound risk management to the markets. Hopefully we can all walk away from this with a little more knowledge and understanding than before we started. Remember to hit that lucky like button. Feel free to share your comments, questions, and feedback in the chat. We do appreciate all forms of feedback. If you haven't already, go ahead and subscribe to our YouTube channel so you get those wonderful updates every time we do go live. Can you not hear me? Is sound off? No sound? Sound? No sound? Throw me a thumbs up if you can hear me, everyone. Gotcha. Just looking at the comments. Okay. Thanks, everyone. Appreciate it. All right. Thumbs up. Hear ya. Excellent. Appreciate it, everyone. Where were we? All right. So this morning, the economic calendar fairly light. Industrial production at 8:15 and University of Michigan consumer sentiment due out at 9 o'clock this morning. Those are all Central Time. It is also the March Quad Witch, which if you're not familiar, the Quad Witch happens, it's when stock index futures, options, stock index options, stock options, and single stock futures all expire simultaneously. So it should bring a little bit of action towards the end of the day. This happens a couple times a year. It's also a Friday, middle of the month. Happy St. Patrick's Day. Overnight, stocks in Asia closed pretty much all higher. Shanghai Composite up 0.73%, Nikkei up 1.2%, and the Hang Seng up 1.64%. Overnight, stocks in Europe trading mostly lower. DAX down 0.37%, CAC down 0.54%, and the FTSE down 0.31%. In the U.S. here, stocks are poised to open a little higher this morning. The Dow is up 1.17%, S&P up 1.76%, and the NASDAQ is up 2.48%. Right now, we have the VIX hanging steady at 24.5. The yield on the 10-year note is at 3.45%. And the dollar index, my last look at the dollar index was 104.26. So that's some overnight action for us. Looking through these comments here, I'm just going to say good morning, everyone. Thanks for hanging in there. Like I said, I had a little tech snafu getting streaming software going. I did test it out the other day, but this morning it just didn't want to work for me. Andy Bleed, good morning. Kevin, Brian, Don Clemens, Charles, Urban Cowboy, Bear Goes Along, love it. Dimitar, Shai T, Alejandro, Sarah Hall, good morning, Sarah. Robert Harrison, Nastic, Mia, Vince, Stephen, Travis, Shaw, Fred Decker, always a pleasure, Mr. Decker. Jerry is awake, good morning. Michael, Ainsley, thanks for all the thumbs up, everybody. I saw that one comment saying somebody couldn't hear me, and I got a little nervous. But all good. Thanks for that. What do you say we get right into it? We'll dive into some charts. I'll show you what I'm looking at. Let me cue these up real quick. So, just a quick walkthrough on my charts. If you've never joined me before, it's been quite a few months since I've been here on the Market Prep. So if you're not familiar with the way I look at the markets, it's pretty straightforward. I look at a daily, a 4-hour, 30-minute, and a continuation chart. Keep my charts fairly clean. You see we have the weekly kickoff highs and lows. I have a handful of moving averages. The green line would be the 10-period moving average. The dark blue, the 20-period moving average. Those are exponential moving averages. The red line is a simple 50-period moving average. And this light blue line down at the bottom here is our 200-day moving average, simple moving average. We also have some volume bars and a slow stochastic oscillator down here for gauging momentum. That's pretty it. The charts will all look pretty much the same. Obviously, just candlesticks. Pardon me. Yeah, I don't get too fancy on my charts. I like to keep it clean. I start fresh every day. I'll draw a few lines throughout the day and just kind of wipe them clear towards the end. But getting started here with our daily in the June contract for the E-mini S&P 500. So today is the last trading day for the March contract. We are on the June contract now. Yesterday, the June contract traded 2.5 million contracts. Some nice, decent volume there. Added nearly 73,000 in open interest. Traded in about a 105-point range. Closed at 39.96 and a quarter, up 69.5 points. That was this nice move up yesterday here. So we did break out of this little consolidation range, which lines up nicely with these December lows going back here. Or I should say mid-December to early January. This area here is turning into something of an inflection point, this 38.40 to 90 area. We're seeing a lot of support jump in here and really trying to hold the market up at this level. Now, as Hoag's been saying, we've been in this little consolidation period for the last week or so. Now we've broken out, so breakout rules do apply today. We took out the highs from earlier this week, yesterday and overnight. You can see we've broken through this neckline of the head and shoulder patterns that Hoag's been talking about. He's been mentioning this for a couple weeks now. So we did test our weekly kickoff low, came back, and closed above our neckline here. So it's likely we're looking at a false signal on this head and shoulders, but we'll need a couple more trading days to actually confirm that. You can see from the slow stochastic oscillator that momentum is still kind of hinting at higher prices right now, and we're seeing some pretty strong volume. Oh, Fred Decker, you're welcome. You got to stay on top of settlements and expirations. That's pretty key. Here's a quick look at our 4-hour chart, kind of a close-up of yesterday's breakout. I did throw a couple lines in here just to outline this sort of converging triangle that I've been looking at. We have a clear close above this upper trend line here, and we're trading above this 50-period moving average. Although we are seeing a little bit of selling pressure going into the open. Mind you, this is a 4-hour chart, though. So we won't get a real... The next candle here will open at 9 o'clock. I want to find out how to customize these candles in Tradovate. Tradovate isn't my normal trading system. I know everybody here is familiar with the Tradovate setup. For my personal trading account, I use TradingView. But I do jump on there every once in a while, pretty much every day, and just update these charts and take a nice look at them. So here is our snapshot of the last 5 trading days on the 30-minute charts. You see we have range-bound consolidation, and then this breakout yesterday. Yesterday was a nice-looking trend day. Open on the lows, close on the highs. We have this end-of-day volume spike here, likely due to the rollover, last day of the roll. But not a large amount of price action for the amount of volume traded there. Overnight inventory looking to be pretty short right now. We took out yesterday's highs and slowly faded back into value here. I do consider this to be sort of a weak high, and I'd like to see it get taken out early this morning. Other than that, I'm looking for support right around this previous 3-day high here at the 39.70 level, which we're sort of hovering around right now. Again, like I said, breakout rules do apply today, so I'll be looking for some low-risk opportunities to buy the ES, and I think we're approaching those spots right now. Let's take another, let's move over to the crude oil chart. So I did switch to the May contract today. I know Hogue was speaking about that earlier this week. We're starting to see volume build up in the May contract, so I did make the switch today. April contract will expire early next week. In all, yesterday, the May contract in crude oil traded about 251,000 contracts, picked up close to 20K in open interest. Like I said, this roll is still in effect, and I think we'll see the bulk of volume start to shift to the May contract today. That's why I'm switched over. In all, the May contract traded in a $3.50 range yesterday and settled at $68.52, up 78 cents on the day. Now, we've heard Hogue talking about FOMO since this market broke out of its range, and it looks like we're going to get a nice low-risk opportunity to short this market today. There was a pullback earlier this morning. We're trading a little bit lower right now, but still in pullback mode above the previous 2 days' lows. Just like the EAS, again, breakout rules still apply. I won't try to fade this market until I see something definitive that tells me it's wrong to short this market. These wicks down here are telling me that there is some excess below and buyers are trying to hold this market up a little bit, but momentum is still pointing towards lower prices, and we're trading well below these moving averages up here. This is a directional market right now. I will be waiting for the right opportunity to get in on the short side for this one. If not today, definitely next week. Here's our 4-hour chart. Obviously, our first signal this week was the close below weekly kickoff low. It's 73.90 here. That happened on Monday. Then we have this nice dip before buyers started showing up at the 66 level down here. This is our low from the last 2 days. Approaching these shorter term moving averages, I may dip my toe in the water, try a little fishing, as Hogue likes to say. I love a nice low risk setup. We almost hit this 20 period moving average right here. I wish I was in here a little while ago. But I like how these shorter two moving averages do provide low risk opportunities in trending markets. Here's a look at our 30-minute. So nice little picture. Yesterday was sort of an inside day. We tested Wednesday's high and low, never broke out of the range. Then overnight we got this little pop higher. Took out yesterday's highs, then dipped right back into value. I do consider this, again, a weak high. Overnight highs that only take out highs that happen overnight that take out the previous day high by only a few ticks, I consider to be weak highs, and I expect them to be taken out pretty early on in the session. But we are seeing a little weakness here early on, too. Now, there are a few more things to consider when looking at this chart. I mentioned breakout rules a few minutes ago. Looking at this kind of changes things just a little bit. This inside day and this weak high could be signaling some exhaustion, and being a Friday after a pretty big down move, Maybe we'll see some short covering coming in. Right now, there's a little bit of weakness early on, right after the open. I want to get a few more. I want to see a few more bars here before I start looking at a position. That said, overall, this market still feels weak to me. I never like to fade momentum, so I may be on the sidelines for crude today. I think we'll definitely see some low risk opportunities to short this market in the coming days, next week for sure. But it could be just a slow burn today. Let's move over to our NASDAQ chart. Here we go. Here's our daily of the NASDAQ. Still trading a bit stronger than the S for the last couple weeks, at least. We're above our weekly kickoff high, safely above these shorter term moving averages here. Momentum is pointing higher. Volume is healthy. In all, the June contract for the NASDAQ traded 740,000 contracts, picked up 19,000 in open interest. Yesterday traded in a right around a 420 point range, settled at 1217.5, up 337 points. That's a nice, healthy move higher. And we are on the heels of 4 consecutive higher closes here. We're seeing a little indifference today. Going into the open, maybe overnight. Well, when we get to the 30-minute, we'll get a closer look at overnight inventory. There's the 4-hour. Again, nice healthy move higher. We took out this high from March 6th with relative ease. Next stop is these February highs up here around the 12.9 area. That's going to be an area I'm looking very closely at. We did see quite a bit of selling pressure coming in at this level, and we're approaching there right now. Here is our 30-minute chart. Nice weekly snapshot. Again, nice move higher, consistent higher highs, higher lows, decent trend day yesterday. Pardon me. They say equities like to move sideways to lower after a big update, but this market still looks like it has some legs. Overnight inventory fairly flat. We took out yesterday's high and settled back down around this point of control here. This looks like another weak high to me. Should be. I like to see weak highs taken out pretty early. I'm looking at the chat. Yeah, Fred, we'll talk about breakout rules. Don't worry. Overall, this isn't a market that I want to really step in front of, try to fade. I will be looking to buy those dips. I understand what you're saying. Late spike higher, in my opinion. Open. I'm just reading Fred Decker's comment here. S&P closed with a late spike higher, in my opinion. Open below late spike is bearish for Friday because higher prices are rejected. The spike is only one data point, of course. 100% agree with that, Fred. When I see weak highs overnight, though, I always like to see them taken out early. So I would say by 9 o'clock Central Time, after that first half hour. Yes, number coming out, 8:15. After that first half hour of trading, I want to see this high taken out. If not, then you change up your strategy a little bit and make your adjustments. Lastly, we'll just look at the gold for now. We're getting close to the equities open. I don't want to hold everybody up. Here is our daily of the gold. This is the April contract. In all, yesterday, April contract traded 250,000 contracts, lost about 5,000 in open interest, traded in a $27 range, settled at $19.23, down $8.30 on the day. So here we have sort of another breakout. Started the week closing above the weekly kickoff high. We have the 10-period moving average crossing above the 50-day here. Momentum is signaling higher prices still. We have some decent volume. Volume is drying up maybe just a little bit in the April contract. There is a roll coming, so that likely have something to do with it. Hogue mentioned that this little pullback here on Tuesday was likely just fuel for this rally, and that's looking to be pretty accurate right now. Same thing can be said for yesterday too, sort of a inside banger day. Let's take a look at the 4-hour chart. This chart is really telling me one thing. Just be patient. Wait for the pullbacks. Don't try to fade this move right now. This 20-period moving average here looks to be providing the best opportunity to get long this week, so I'll follow suit and wait for the dip to jump in on this one. I think we're going to see some nice opportunity in this one early next week. Likely not making too many gold moves today, but I will be looking forward to next week in the gold market. On our 30-minute here, we see yesterday was sort of a hanger day. We really never tested these overnight lows from Wednesday night. But we did take out the regular trading hours low towards the end of the day. Now we have overnight inventory long. We're opening with gold did open with a gap higher, and it's sort of running away right now. Momentum still pointing higher. There's a lot of room to run. Once we blow through these February highs here, this is our continuation chart, coming up on these February highs here, and there's a lot of upside potential once we blast through there. I think our overall theme for today is don't fight the trend. So I'm thinking either get out of the way or just stay patient and wait for those low risk entries. No one likes to get burned on a Friday, especially me. It's happened to me too many times in the past. I'm looking for layups today. And we're getting some nice movement early on. Let's see if we can't find the results of this number real quick. Industrial production is out. Just getting those results real quick. Month over month, no change in industrial production. Manufacturing output is up 0.1%, and capacity utilization rate is at 78%. Pretty on par. The consensus was for a 0.4% increase in industrial production, and actual came out at 0. So just a little off, a little worse than expected, but right in the middle of the consensus range. All right, let's switch back over here real quick. So, with that, we're going to close it out here. We covered those 4 markets, a little sort of abbreviated version of what Hogue normally does. We just did the ES, CL, NQ, and gold. Again, thanks for spending your time with me this morning. I appreciate it. It's been a few months since I've done this. My apologies if I'm a bit rusty. I know we got started a little late. I was having some tech issues. But yeah, aside from my duties here at Top Step, helping to manage content, I am also a dedicated day trader. I've been doing this for nearly 20 years. I hope you took something away from this. I love learning from you guys too. I appreciate all your comments. Feedback, always welcome. I hope everybody has a great weekend. Happy St. Patrick's Day again to those who celebrate. Careful that quad witching could make for some little action going into the close today. So stay on your toes there. Don't get a little too overextended going into the weekend. I hope you all enjoy your weekend. Hogue will be back on Monday. Again, Hogue, if you're listening, happy anniversary to you and Donna. We all appreciate you and everything you do for us. And with that, I will leave it. Everybody have a great trading day, great weekend, and I will catch you later.